Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, welcome back to our Christmas edition of the show.
Jim, it's a pleasure to be back on the show. Today we are going to talk about the kinds of companies I'm going to make part of my 2023 favorites collection. I'm not going to mention names, just sort of descriptions of what their stories are like. On January 3rd, I will have everything up on the website, unrestricted. People can check it out then. But in the meantime, my subscribers are focused on the bottom fish collection, from which there will be a number of graduates to the Favorites 2023 collection.
John, you frequently talked about Lithium Mania 2.0, but you haven't mentioned any lithium companies. There were none in your 2022 favorites collection. What sort of lithium juniors would you consider including in your 2023 favorites?
Jim, I'm pretty late to the lithium game. I missed it during that 2015 to 18 period, what I call Lithium Mania 1.0. And I was asleep at the switch last year when the lithium carbonate price started to take off. And a lot of these companies that had done work with lithium projects, both brine and pegmatite projects during that 2015 to 18 period, all of a sudden these took off. But better late than never, because Lithium Mania 2.0 is about the great pegmatite hunt needed for beyond Australia. In 2015-17, the Australians proved really successful in checking out all their existing pegmatites, which had been found decades ago and which were worthless. They delineated them and have put them into production, and they managed to oversupply the market by 2018-19, with the result that lithium carbonate prices, which were in that sort of $10 to $15 a pound range, which is really good for pegmatite projects, it tanked below $3 a pound, where nobody makes any money. Today, lithium carbonate is around $36 a pound. That's too high in the long run. People are predicting that it'll sink back into the $10 to $15 per pound range. But before it does that, because of the reversal of supply-demand imbalance that took place started to take place last year and really accelerated this year, we may even see higher spot prices over the next year, and that of course won't hurt the Lithium Mania 2.0, but people should keep in mind that we really need a lower price to make this whole idea of electric vehicles replacing internal combustion engine new car sales by 2035. For that to become reality, those cars have to be affordable. So Lithium Mania 2.0 is not so much about the brines anymore. And it's in Australia, of course, all these juniors are now looking elsewhere beyond the main pegmatite fields for additional pegmatite deposits. But the Australians have also invaded other Archean cratons of the world, and eastern Canada, stretching into Saskatchewan, all the way up into the Northwest Territories, into the Arctic. That's an excellent place for lithium-enriched pegmatites. So is Brazil, possibly even parts of Argentina and Scandinavia, and also in Africa. We have the DRC, the Congo craton, and the Zimbabwe cratons. Those have greenstone belts with have always been used for mined for gold, but they also have pegmatite potential. And of course in Western Africa, which is also Archean greenstone terrain. And there the problem though is that we have the Boko Haram jihadis making inroads everywhere. We have political instability with the Russian mercenaries helping out local militaries to suppress the jihadis. So Western Africa has become something of an unstable place. But Lithium Mania 2.0 is primarily for these more secure jurisdictions: Canada, Scandinavia, Zimbabwe I like, DRC, Congo I'm not keen about, and of course in Brazil. So I have two companies flagged for 2023. One is a diversified Canada-focused grassroots explorer, which is going to finish the year with about $10 million in working capital and in its treasury. It spent all of this year assembling a large portfolio of projects in Atlantic Canada, Quebec, and Ontario, going out into the field with their XRF gun, checking to see if the pegmatites that are outcropping have the rubidium signature that indicates they have LCT potential. They will start drilling in January. By the second half of next year, we should know if this company is sitting on a number of major new discoveries. And at the other end of the spectrum, I have a company which just completed a feasibility study on a pegmatite deposit that was found many decades ago, and which the company has had since the what I call lithium 0.5 mania, which was that first period between 2010 and 2012, which coincided with the rare earth mania period. They are now in the permitting cycle. Their economic study, the discounted cash flow model, is assuming a $12 equivalent lithium carbonate prices. The project is fairly priced for this particular for this project, for the economic model underpinning it. And if you look at the current price 3 times higher, it's going to end up being worth more, because everybody in their cash flow models is using higher prices in sort of 2025 first few years, and then eventually by 2030, as they expect a lot more lithium supply to come on stream, then they're using lower prices. But for now, this company is using the lower end. The base case is at the lower end, which means that there is upside potential for this company, and it's in an area where infrastructure is pretty good, and it also has the potential, after spending the past decade just figuring out what this existing system was all about, to looking a little bit beyond the initial focus and assessing that area. There's other juniors in the area that are doing grassroots work, generating new targets that aren't so obvious. So this company could end up by either being taken out by somebody or end up taking out others as it expands its own footprint and marches towards production. Now, one of the interesting developments is that in September, Rio Tinto announced that at its Sorel-Tracy facility in Quebec, it was working on a pilot plant study to produce, for a process that will produce a higher grade concentrate of spodumene, which these pegmatites, they produce a spodumene concentrate, and it's either down near 5% for chemical grade or 6% for technical grade, and this gets trucked to a hydroxide refinery and converted into the battery grade material that the car makers need to build their lithium ion batteries. But if Rio Tinto is successful in developing this method and has a higher concentrate, not only will that reduce the transport costs from the mine to wherever the hydroxide refinery is located, but it will probably also reduce the per unit output cost of the refinery itself. And Rio Tinto, it did an $800 million acquisition in the lithium triangle for brine lithium supply not too long ago. It discovered the Jadar project in Serbia, and it's better than a claystone. It's a different type of mineral. It's not a pegmatite system. It has world-class proportions, but it's basically stalled because of politics in Serbia. And Rio Tinto has been, scanning this lithium space for some time. In its own presentations, it makes clear that it understands there's a tenfold demand expansion coming by 2035 if these EV replacement of ICE is supposed to become reality. And when you do the numbers, even down at sort of that $10 to $15 a pound range, where you're going to need that as a base, because otherwise you're not going to have any lithium supply, we're talking about $100 to $200 billion lithium market by 2035. And that would put lithium on a scale comparable to copper. And when you consider that in 2005, the entire market was worth only $200 million. This is a dramatic change like we have not seen for many many decades. And that's what's going to drive Lithium Mania 2.0. I wouldn't be surprised to see that Rio Tinto makes a major acquisition of one of the Australian pegmatite producers, and perhaps even makes an acquisition in Canada for one of these bigger projects that are being developed. And for the juniors, of course, the game is going to be to find a brand new pegmatite that had not been recognized before, demonstrate that it has grades in the 1 to 2% lithium oxide range, that it has, size potential, ideally, 10 million tons plus, and not just a series of widely scattered skinny dikes, and enter into the S-curve activity. And this is why, regardless what happens to the general economy, in 2023 as a result of higher interest rates and pressure on real estate prices, the lithium problem, the end users, the car makers, they now get it. They're busy now building battery factories. They're busy even sponsoring hydroxide refineries. But they're only starting to realize that the physical volume of material needed by 2030 and beyond, it's not in place. And, much of the attention in the past few years has been on the lithium brines and the lithium triangle. And this week we saw a takeover bid where Arena Minerals, which had assembled a big land position, it's being acquired by Lithium Americas to consolidate its own footprint in that area. And that's about only a 28% premium, $311 million Canadian value. It's a liquidity event. The lithium triangle is tough. It's all owned by parties now. There's all these questions about recharge cycles. Is there enough room for evaporation? A lot of the projects are being investigated for direct lithium extraction. And this is also being applied to places like the geothermal fields near the Salton Sea in California, and also in oil field areas such as Alberta, Saskatchewan, and also in the United States, where these brines that are associated with oil deposits, these are potential sources. But this is a processing technology, and the industry can't really sit there and pray that this is all going to work and we will have abundant lithium coming from these brines. It wants to see the physical source in place. And that's why the Great Pegmatite Hunt that is now going beyond Australia and happening in all these other places like Eastern Canada, Southern Africa, and Scandinavia and Brazil, they will be supporting it. And even if we're in a bad general market that's worse than it was this year, the lithium problem and the EV sector rollout, it goes beyond whatever couple years of recession that we have, because they all know in the end they'll have to lower the interest rates and use quantitative easing to restore the global economy. So we have kind of like a bubble period coming here. A big action by somebody like a Rio Tinto could be the trigger. But the younger audiences, like last week we talked about the listed issuer financing exemption, so-called LIFE, which allows non-millionaires to participate in private placements. This has the potential to bring Gen Z and millennial generations into this market, participate with leveraged upside with the help of a warrant, and be engaged in a collective activity which helps secure their future well beyond that of the boomer generation, which has been the traditional audience for the resource juniors. So I'll have two lithium juniors, one at the grassroots end, the other at the development end as part of the list. There will probably be more added next year. And right now in the bottom fish collection, I've got a half dozen, which my members, which I flagged for my members, which we are busy accumulating and expect to ride the tailwind of Lithium Mania 2.0 in 2023.
Prospect generator farm-out juniors have been a staple recommendation for decades by people like Rick Rule. What is the outlook for prospect generators in 23, and will you include any in your 2023 favorites?
I have two tentative picks for the 2023 favorites. One is a traditional follower of the model, which religiously farms out the prospects it generates. This is the kind that Rick Rule would be proud of. And it's a fairly new company. It isn't cheap. It is focused on Canada, and it has strong financial backing. And it has a relatively young management team. So this is really interesting. I have not talked much about this company, but I have been impressed by the way they generate grassroots projects that are interesting, have been able to attract farm-outs to majors, and have been doing clever things. For example, they're not getting into the lithium game, but they just made $9 million selling the paper that they got for basically selling everything but a royalty to a company which is one of those sort of machine-type plays that has started off with a grassroots project and is now acquiring other existing pegmatites to build itself up as a major lithium player. Now, the counter example for the religious prospect generator farm-out type is Mirasol Resources, which I've had on and off as a bottom fish several times in the past couple decades. And whenever we were in a bull cycle, it would flutter up into the $2 to $3 range. This company specialized in South America. It generated prospects. It was able to attract good farm-out deals with major mining companies. But in the course of these 2 decades, it spent $80 million generating these prospects, and none of these projects ever resulted in a significant discovery. And that kind, people have gotten tired of that kind because say, how can you have so much talent, so much money, so much farm-out success, and still have delivered nothing at the end of the day? The other bottom fish that I've got tagged to become a favorite that's in this grassroots prospect generator category, this one has a tendency to periodically buck the rule of always farming out. And of course, the poster child for all this was Andre Gaumond and his Virginia Gold, and it was launched right in the midst of the Bre-X fiasco in 1997. It specialized in the James Bay area of Quebec, doing grassroots exploration. It would get farm-outs of projects. But in 2004, there was an outcrop which Andre Gaumond said, this one is 100% keeper. And that raised the ire of backers such as Paul Van Eden, who through his newsletter writer had been preaching the prospect generator farm-out mantra. And he went and drilled this 100%. It became the Eleanor project within a couple years before they even had a maiden resource estimate. It was bought out for $750 million by Goldcorp at $14 a share. And at the end of the day, it was put into production. It never did quite live up to the promise that it had in the beginning. But nevertheless, it was the ability of management to, as it's generating these prospects, to realize this one has potentially low-hanging discovery fruit that I'm going to drill with my own nickel. And that worked out beautifully for Virginia Gold. So this other junior, it has been in the business for the past couple of decades. It's had a couple of spin-out successes, none of them spectacular, but the last one has helped it with $10 million treasury, so it's well equipped to spend money. It has a Sullivan 2 prospect into which it drilled some holes this year. It didn't deliver a discovery hole, but it did create geological context that says, okay, this thing which others have looked at for decades, we finally think now where a Sullivan equivalent style SEDEX system is located. So they will be drilling this in the new year. So that gives you 100% shot for a huge discovery play. And they'll also be monetizing the royalty portfolio that they've accumulated over time. Some of the deals they farm out and retain a 30, 40, 25% interest, but others they farm out 100% to the junior and keep a royalty that it doesn't have any buyout provisions and is not capped. And so it's accumulated a number of these, and one of them is in a project that's got now several million ounces delineated and looks like it may head towards into further feasibility demonstration work. So we could get some value out of that one. So these two companies, a brand new one I haven't talked about before, and another one that I followed for many years, they will be my prospect generator farm out candidates for the 2023 favorites collection.
During 2022, you developed the idea of the story path and the emerging discovery. You currently have several emerging discovery stories in your 2023 bottom fish collection. Will any make it into your 2023 favorites collection?
Some of them, some of them I've actually talked about in Kaiser Watch, even though they're still part of the bottom fish collection. Some of them will stay bottom fish because we are still waiting for confirmation that the emerging discovery is a real discovery. But several of them are now properly financed. They are higher than they started the year last year, and so they're ready to become part of the 2023 favorites collection. And when you talk about the story path, earlier this year I started thinking, okay, I specialize in figuring out what is the story by which these juniors are trying to create new wealth. What's the hook? What's the angle? And I ended up assembling all the different types of stories and created a template which makes it easier for me to digest what the story's about, listen to management, and then show the path that the company is pursuing and what it is doing differently that should lead to success. And that has helped me structure my thinking, my presentation of these stories to make it easier for my subscribers to understand. Now, the emerging discovery idea became relevant in the second half of this year when my expectation that the resource juniors would buck the general market downtrend and continue up because of this, decade long of non-development by the mining companies and looming shortages. Well, that proved to be wrong. They ended up getting sucked into the vortex by the middle of the year, and so ended up having a fairly negative year. And we are still, we're sort of in the final bits of tax loss selling. The resource juniors are still cheap. They're not really rebounding yet. And in this bearish mood with expectations of possibly worse to come in 2023, this phenomenon emerged where companies would drill holes and the results wouldn't be no-brainer, oh my gosh, we've got an Aurelian Fruta del Norte discovery hole. No, we have something that says the geological context is coming into view and there's no market reaction. So it gives time for people like myself to look at the results, to talk to management, to understand what they think they have on the line. Like if the fish ain't reeled in yet, but it looks like it's something potentially very big. And you can accumulate these stocks. And I tag these emerging discovery. So one of the ones that will make it to the 2023 list is a Athabasca Basin Junior, which pulled a hole this summer, which indicates that it may have a MacArthur River scale discovery, and it was able to raise money. The stock hasn't really gone up significantly in response, but they will be drilling in Q1 of this year with a proper directional rig so that, this relatively deep target between 800 and 1,000 meters, they can drill some pilot holes and start probing and chasing it. We're still awaiting for some assays to confirm that they actually do understand what the geometry is down there. But this one has the potential to do really well and create a full S-curve type discovery play market dynamics. Now, another one is a company that has an emerging gold discovery in southwestern British Columbia. And I've talked a bit about this one on Kaiser Watch. And it hasn't yet, although it has many high-grade gold intersection, the market's still uneasy about what the geometry of this system is. And it's sort of still waiting for some hole or some understanding to emerge, which says, ooh, this clearly is going to be a multi-million ounce gold system. And one of the things the company did this year is it expanded the footprint of the project by optioning additional claims surrounding it, because this structural trend that they are drilling right now, it has repeat potential several times to the northeast, and they'll be looking at that closer in 2023. So that one will be my emerging gold discovery play on the list. The third one is a company I have not yet introduced to Kaiser Watch, though for KRO members I have talked about it. This company has what I think is the last major gold exploration frontier in the United States. And this is a remarkable story. In 2021, this company picked up this land package. It has since expanded it. It's to the west of a similar sized district that has had over 90 million ounces identified, with over 60 million of those produced. And this area that this company has staked, it has not been able to drill. It has had almost zero exploration activity in the past. Maybe a couple holes that were just done as geological scout holes. But the rocks are younger than they are in the gold district to the east at surface, and it's generally bush and soil covered. And there has simply been no reason for people to look hard at it. And yet when the company went in there and started looking closer, it was able to find high-grade gold mineralization at surface, and they could only trench and sort of prospect it because this area requires an environmental assessment. They applied for that in February. They hope to have it by the second quarter of 2023 and be drilling by the second half of next year. And they will be drilling these 500-meter holes which go through carbonate stratigraphy into Precambrian basement, checking for several types of targets that exist in the gold district to the east. And to me, this is, and the company is well financed, this is an extraordinary potential gold discovery play. And clearly the leakage that they're seeing at surface, it's the same age as formed the younger deposits in that district to the east. And it's been overlooked for the last 100 years when there was mining and development just to the east of this property area. And I have a fourth bottom fish that I'm hoping to be able to add. This company right now is part of the bottom fish collection. It was 10 cents last week. The company put out a news release, which when I look closely at it, I said, this is very strange. This is a second-rate niobium project owned by this company. And it has a deposit that was found, a low-grade niobium deposit that was found in the 70s. It actually had economic studies done on it, but the niobium grade's just too low, 25 million tons of this, and it's not really going anywhere. And the company's flagship project is in limbo because of First Nations politics. But this project, this news release, they talked about having drilled a number of holes and thin sections that have pyrochlore in it. And I said, oh, this is really odd. So why are they wasting money on this project? And it turns out that because they were stuck twiddling their thumbs and couldn't make any headway with their flagship project, which is a serious niobium deposit that should be put into production, they decided to rethink this existing play because they just couldn't really explain where the niobium was coming from. And lucky for them, it had been clear-cut logged in the past few years, and when the crew went out into the field, they wandered away from the main dike, which is about 20 meters and runs for 4 kilometers. And this is a very hard, pegmatic type of cyanite dike material, so it doesn't weather very well, so it sticks out of the ground. And of course, that's what focused everybody's attention in the past. And they started seeing a softer carbonatite type of rock in little creeks and other sort of eroded parts of the property to the west. And they mounted this drill program. First few holes weren't very interesting, but then they hit something which said, oh, something's going on to the west. And it looks like a couple kilometers to the west of this system that has received all this work is a giant carbonatite system hidden under a lake. And carbonatite material, it's softer and it erodes. So glaciers would have gouged it out and dragged the material away. They have assays pending. They drilled the holes from the side of the lake. They bottomed in carbonatite. Their XRF unit says, oh, this is kicking niobium values, but you cannot really, with core, you cannot measure the niobium content. It's a completely different host rock than the dike on which the existing low-grade resource exists. And if these numbers come in at, 0.4% niobium and higher, then we have a brand new discovery with the scale perhaps comparable to that of the Niobec niobium mine that's located 150 kilometers to the southeast. So I'm not sure whether I'll be able to add it to the list. The stock's in the 15-20 cent range. My subscribers are accumulating it now. But if this turns out to have assays that support a decent grade, wow, then this one's definitely going to be part of the 2023 favorites collection.
How many of your 2022 favorites will make it into the 2023 favorite list?
In the December 9th Kaiser Watch episode, I walked through all the existing favorites, and I flagged two of them as definitely going to make it into 2023. I wasn't sure about the third. I have been able to go back and do some deeper digging, and the third one is now confirmed also as being part of the 2023 favorites collection. Now, the others are all going to be consigned to the bottom fish collection, and most of those are advanced gold or copper companies. And we don't know how gold and copper prices will behave next year, especially if we go into a recession. So the market, unless it sees the prices for gold and copper trending higher, it's reluctant to really sort of buy stocks that are involved in demonstrating the feasibility of a future gold or gold and copper mine. But I think because of this problem with the geopolitics that's not going to go away, and the energy transition, which is going to require a lot of these critical metals, some of which are being affected by these geopolitical dislocations, I think next year metals that classify as critical or somehow fall into the battery metal category, I think those will be able to hold the market's attention. Now, if this recession turns out to be a soft landing and not as bad, and the Chinese zero COVID fiasco resolves itself, and Putin stands down, gets booted out, and withdraws from Ukraine, and we do not have these other sort of geopolitical pressures anymore, and the economy gets back on track, then of course copper will start trending higher, and I'll be able to add back some of these bottom fish from the bottom fish collection, add them back into the 2023 favorites. But the three that I'm keeping, they all have unusual stories that stand in their own right. They're relatively undervalued, and one of them is likely going to be a target for a buyout consolidation of an emerging gold district. So I'm quite optimistic for 2023 that this collection will be much better performer than the one I had, the 8 companies that I had for 2022, which is pretty much limping to a finish, being down around 40%, though we won't really know until the end of this year. Stay tuned for January 3rd when I reveal who these members of my 2023 collection are.
John, thank you so much for the update, and best of the holiday season.
Thank you, Jim, and I wish the best for the holiday for everybody else and yourself.
We've been talking with John Kaiser. I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.